What's up YouTube, Eric here. Today we're gonna cover the top 10 wide moat stocks to buy now. Now here's the thing about moats. First of all, people don't really understand the definition. So we're gonna go through and we're gonna explain what the definition of a wide moat stock is, where the term even come from, and what the parameters are to even qualify. The thing that people don't talk about a lot with wide moat stocks is that they assume that there's no competition at all or that the moat is impenetrable for the test of time. That is not the case. A wide moat can deteriorate over time, but in this given moment in time, these businesses have a moat. In other words, they have competitive advantages over the competition. So let's talk about it. Let's explain what wide moat means, and we're gonna go through 10 picks, high level, rapid fire. I'm gonna give you the picks and just a couple reasons why I think they're wide moat stocks. Now you may agree or disagree with some of these stocks, and I want some conversation below, so make sure you drop some comments. Let's get started. Okay, first gang, what is a wide economic moat? A wide economic moat is a type of sustainable competitive advantage possessed by businesses that makes difficult for rivals to wear down its market share. Doesn't mean they can't, it's just difficult. The term economic moat was made popular, of course, by Warren Buffett and is derived from water-filled moats that surrounded medieval castles. The wider the moat, the more difficult it would be for an invader to reach the castle. A wide economic moat can be caused by several factors that might make it difficult for other businesses to steal market share. We're going to talk about what those factors are. So three of the key takeaways here, okay? A moat is going to have an advantage over competition, okay? It's going to make it difficult for competition to mimic or duplicate. So brand identity, patents, things like that we're going to talk about here in a second. Now this third one is really key. Companies with a wide economic moat are able to generate large amounts of free cash flow and have a strong track record of returns. I see on Twitter a lot of times people say, well, CrowdStrike has a strong moat. Well, CrowdStrike does have a lot of competition, but does it have free cash flow and a track record of strong returns? Some could argue that that's not necessarily the case. It's more of a SaaS company. It's burning cash, doesn't have a PE ratio, right? So we're going to look at companies that are going to have those PE ratios, strong cash flow, strong balance sheets that are more stable growth or mature growth. The last video we covered 5 stocks under $10. That's going to give you high risk reward. These stocks are going to give you a lot less risk, but also a lot less reward. They're going to be core positions in a portfolio, give you some stability or a foundation to build your other stocks around. So businesses that possess at least one factor of Porter's 5 forces model would possess a wide economic moat. Just one factor of the 5, okay? For example, a business that holds an exclusive patent for the creation of a miracle drug. Having few or no competition would allow the company to continually generate high levels of profit. So I won't spend a lot of time on this, but it is important. Porter's 5 forces is a frequently used guideline for evaluating competitive forces. It's used to see if a company has an economic moat, a wide economic moat. It was created by Harvard Business School professor Michael Porter in 1979. So in a nutshell, here are the 5 forces right here: competition in the industry, potential of new entrants or barriers of entry, powers of suppliers, power of customers, and threat of substitute products. So barriers of entry, a company that exists in a business where the startup costs are prohibitive for small entrants to join the market and to try to penetrate the market share. There are several ways in which a company creates an economic moat that allows it to have a significant advantage over its competition. Sources of economic moats, a company that's able to maintain low operating expenses in relation to its sales. So think of companies like Walmart, has immense volume of sales, negotiates low prices with suppliers. It's very hard for me to start a small mom and pop shop and compete with a company like Walmart with the scale that it has. So another one, guys, intangible assets. So you think of patents, brands, licenses. This allows the company to have a competitive advantage. While brands are typically derived from a superior product offering and marketing, think of like Nike, patents are obtained as a result of company filings with government to protect know-how for a specific period of time, typically 20 years. So you think of some of the technology like NVIDIA making semiconductors, they might have patents that make it harder for other companies to replicate what they're doing. Pharmaceutical companies earn high profits due to patent drugs. Think of Pfizer. They made a fortune off that little blue pill called Viagra before it went generic. So again, that moat is not impenetrable forever, but they had a 20-year patent on that gave them a sustainable competitive advantage for a period of time. Efficient scale arises when a particular market is best served by a limited number of companies, giving them near monopoly status. Think of cloud services. Sure, you can go up and start a public cloud and try to compete against Amazon Web Services, Microsoft, and Google. But good luck with that. There's only a few companies that really are gonna give you the best of breed, that are gonna give you that competitive advantage. And AWS and Microsoft really stand out from Google, but those three combined with some smaller vendors like IBM and Oracle and maybe some Chinese vendors, there's really only a handful that do that particular service. Switching costs are another type of economic moat. Makes it very time consuming and expensive for consumers to switch products or brands. Think of ERP software. If you want to rip and replace Oracle and put in SAP, that's going to cost you a lot of time and energy and money, okay? So switching costs are going to be huge. Autodesk offers various software solutions for engineers and designers that are very difficult to learn. Once Autodesk customers starts using its software, they're very unlikely to switch. So software companies fit very well into this switching cost category. It also allows them to have pricing power so Autodesk can charge premium prices for its product. So the last one, and then we're gonna get into the 10 stock picks, so definitely stay tuned, guys. The network effect, okay, can further fortify a company's economic moat by making its products more valuable to the people that use them. An example of a network effect is online marketplaces like Amazon and eBay, which are widely popular among consumers because of the large number of people buying and selling various products through its platform. Let's get this party started with the 10 stock picks. Now, these are not in any particular order. The first one is gonna be Microsoft. Now, just doing a quick Google search, say, does Microsoft have a moat? Microsoft, ultimate definition of an economic moat. Microsoft certainly has one of the widest economic moats in existence, combining technological superiority, network effects, and switching costs, and so on. We just talked about all these in the intro. Microsoft definitely fits the bill, not only with Microsoft Office, which most people are not going to debate that it has a moat, but also other areas. You think of public cloud. So it's got kind of a duopoly really with Amazon Web Services and Microsoft Azure when you think of cloud services. But this company has its hands in a lot of pots. Of course, one of the definitions, it has to be very profitable. It has to have a moat where it's tough for the competition to penetrate. Microsoft has tons of patents, has tons of licenses, and they're going to be around as a behemoth for a while. Now, this one is a mega cap, $1.84 trillion, and it's going to report earnings here this week. So definitely pay attention to that. All these stocks, they're going to be reporting earnings. If they have a bad earnings, you could see the stock drop, and I think it's an opportunity to add. So I like these companies at this stock price and lower for all the 10 stocks we're going to cover. Now, 52-week range on Microsoft got down to $219, probably a strong buy there. High was $350. 25.64 PE ratio. It does pay you a dividend, 1.1% dividend. First stock pick, guys, Microsoft. Now, in the intro, we talked about some of the different categories, and we talked about Amazon and eBay and how they have strong moats because they're a marketplace where tons of people go to buy and sell. And MercadoLibre definitely fits the bill for a moat, especially when you think of international, Latin America, South America. These guys definitely have a moat. They have their hands in lots of different pots, including e-commerce, as well as fintech, loans. There's lots of different areas that MercadoLibre covers. Now, this one got down to $600. It's trading right now at $827. I think it's an opportunity, especially when it gets under $800 a share, so keep an eye on that. It does not pay a dividend, but it does have a PE ratio, albeit a high PE ratio at 174.94 in that PE ratio. And it's a large cap, $41.64 billion. This third pick I've been in for a while. It's one of my cloud favorites. It's ServiceNow, ticker is just NOW or now. What is their moat? ServiceNow's moat is based on its ability to lock in customers and maintain high customer renewal rates. Now, SaaS is going to be this way for a lot. The problem is a lot of them don't have PE ratios, and so it doesn't necessarily fit in the category when you're thinking of the economic moat definition we covered in the intro. So ServiceNow also operates on a subscription model, again, recurring revenue. So if you find a SaaS company, right, and they have recurring revenue, they have that net-based dollar retention, and they're continuing to grow, they're keeping their customers, and they're growing that footprint. You think of like ServiceNow, that has a PE ratio. You think of Salesforce, you think of Adobe. Those type of SaaS models that have PE ratios, they fit well into that moat category. Of course, there's still competition, but ServiceNow is one where there's not a ton of great competition that deals with what ServiceNow does. So this one, in my opinion, fits very well. Now, all these stocks, I'm not just pulling them out of the sky. Analysts like Morningstar agree with a lot of the companies on my list that they are also considered wide economic moats for Morningstar and other analysts. So that's something to make sure I note as well. Now, ServiceNow got down to 337 October 13th. It's not much higher now at 366. Again, careful with earnings and all these. This was a $700 stock back in November of 2021. So this does have that PE ratio that we talked about, but it's a high PE ratio. It's a 404.75. Now, usually in SaaS, you're going to use things like EV/NTM revenue. You're going to use Rule of 40, net-based retention. You're going to use things like free cash flow. The good news here is that they have that positive free cash flow. They have that recurring revenue. They have that net-based retention. They do have a P ratio, but it's expensive at 405. Okay, so you might look at that and say, well, I'm a value investor. It doesn't make any sense. That's fine, but understand these are valued differently when they have that recurring revenue model. Market cap on this one is $74 billion. Check it out, guys. ServiceNow, ticker is NOW. Now, some people aren't going to like this stock, and they're going to say, Amazon doesn't have a moat. There's tons of competition. Walmart can do what they do, and eBay and all these other companies. Amazon definitely has a moat. They've got barriers to entry. They've got tons of regional facilities. They're growing that out. They're trying to grow those regional facilities out, I think, because they want to use drone delivery services, taxi delivery services, things like that. But Amazon Web Services is a beast and really has its own moat within cloud services. Sure, there's competition, and Microsoft Azure is a strong competitor. Maybe you want to call it a duopoly. But Amazon has multiple segments of its business that have definite barriers of entry and that have competitive advantages. And what is defined as a moat? We defined what moat was in the beginning. Amazon fits the bill. It does have that P ratio again, but it's expensive at 107.75. Market cap, $1.22 trillion. This bottomed out at $101.26, May 24th. So we haven't seen that low for a little while. It got really close here recently, but it's back to around $120 a share. Going to be reporting earnings this week. So definitely be careful with that. If this thing drops down, I think $105 in that range, that's where I'd really like to buy Amazon. I've been long in this stock a long time, but Amazon definitely fits the bill as a wide moat stock, AMZN. Okay, so the fifth stock on the list, we're going back to SaaS. Okay, this is going to be that software as a service model. This has a 64 PE ratio, which is pretty attractive for a recurring revenue type model. This is a mature type growth company. Okay, they've been around for a while. Market cap on this is $24.6 billion. It bottomed out at $151 here just a couple weeks ago, October 14th. The high on this in the 52 week was actually about a year ago, October 27th at $325. So this is Veeva Systems. And the reason it has a moat is they deal exclusively for the most part in life sciences. Okay, when you think of ERP, when you think of enterprise resource planning, so software that runs your business, when you think of companies like biotech companies, like drug companies, pharmaceutical companies that want to take a product from concept to production to get it to customers, they're going to use a product like Veeva Systems. And there's not really a lot of competition. They definitely have a competitive moat when you think about the niche of what they cover. So if you want to know more about Veeva Systems, definitely check them out. But this does have a competitive moat within SaaS. Veeva Systems, ticker is VEEV. We're sticking with that software as a service model, guys. It's a recurring model. I think it's strong, especially if you're looking for growth. This is a mature growth when you think of SaaS. But I think there's still a lot of room for SalesForce long-term as a business. Now, a lot of you are going to comment below and say, SalesForce doesn't have a moat. I hate using Salesforce. There's tons of other CRM systems. Trust me, guys, Salesforce has a strong economic moat if you understand the definition of what a moat is. It's trading at a 300 PE ratio. Market cap on this is $160 billion. It's been dead weight for quite a while. It did get back up to $311 November 11th, but it's really, if you look at a chart on this thing, guys, if you look at a 2-year chart down here, this thing has kind of been sitting there. It was 260 back in November of 2020. And it's kind of held around $200 and then got to 300, and it's just been dead weight for basically a year, going lower and lower, like a lot of these growth stocks. This one, I like it at $150 or less. It got to $137.59 October 13th. I like it in that range. I still don't think it's a terrible buy at $160. And you may hate this company and think that it's not on the list. If you don't understand Salesforce, do yourself a favor, do some homework on Salesforce. I use this. I was in sales. I was in software sales for many years, over a decade, and we use this every single day. Everybody that I know that works in competitive software type sales role, including my wife, they all use Salesforce CRM daily. And of course, Salesforce owns Slack. And they do have an economic moat when you're specifically thinking about customer relationship management within software. Check out Salesforce, ticker CRM. Now, remember in the beginning, we talked about branding, that could be an economic moat. You definitely cannot argue that Apple has a strong brand and that it has an economic moat if you look at the definition of what a moat is, okay? Apple, and even Warren Buffett owns this one and he thinks it has a moat, right? So this thing got down to $129 here, June 16, 2022. It does pay a dividend, 0.61%, 24.69 P ratio, $2.4 trillion market cap. If you can get this below $150 cost average, I think longer term, you're probably gonna be happy. This does have a moat, especially when you think of the ecosystem that it has. You think of the App Store, the iPhone, people that use Apple, like I've got an iPhone, I'm talking to you on an iMac, I've got tons of Apple products. You might hate them and you might be a Samsung person, an Android person. Nothing wrong with that, but you have to admit that Apple does have a strong moat and it belongs on this list, guys, so Apple. Now I have 3 more stock picks. Before I get into that, I need to announce this video is sponsored by the Motley Fool. And if you'd like to see the 10 best stocks to buy now, visit fool.com/Fired Up Wealth. A reminder that they do not tell me what videos to make, what stocks to cover. They're a great partner and they allow me to bring free content like this to you on YouTube, so check those guys out. If you're gonna search for something online, you're gonna say, I'm gonna go Google it. It's become a verb, and this is definitely a moat in a lot of different areas. They own YouTube, which I believe is a strong moat. The only thing that even tries to compete with it is Vimeo, and they don't have ads, so when you think of the model, they're completely different. Alphabet Google has a moat in several different areas, especially when you think of advertising online, when you think of internet searches, you think of just the Google search engine. It definitely has a strong economic moat, strong brand. This thing got down to 94.38, which is crazy to me on October 13th. It's still trading at $102 a share, which I think is an opportunity. 19.0 P ratio, gonna be reporting earnings. So if this thing dips, it's an opportunity, in my opinion, to add. It's a mega cap. It was once a $1 trillion club company. Now it's $705 billion in the market cap. Definitely check out Google. I like the A shares, which is GOOGL. You can also buy C shares, which is GOOG. The only thing that matters really there is the voting rate. So for you, if you're not investing a ton of money, it probably doesn't matter much. Check out either Google or Alphabet if you want to be politically correct. I mean, robotic surgery, of course, it's up pre-market here, 5.57%. This thing got down to $180. Below $200, I was pounding the table. I was saying it was a good opportunity. Now, I wanted to add this back. I owned this for a while. I sold at the beginning of the year, much higher, and I still have plans to get this back in my portfolio. When you think of competition, Medtronic, they bought Hugo, right? So they have their own kind of system, but Intuitive Surgical definitely has a competitive advantage, a first mover advantage, and they're very strong when you think about robotic surgery. And I've got a video on the channel on this one if you want to go explore it a little bit deeper. It has that PE ratio again, 58.33. It doesn't pay a dividend. Large cap, $77.84 billion. There's no denying this one has a strong economic moat. Ticker is ISRG. Now, before I cover the 10th pick, guys, if this was helpful, do drop me a comment. And I want this to be conversational because I agree that there are a lot of companies that could have made this list and you're going to probably be upset that your stock wasn't on the list. Okay, this is not an all-inclusive list. These are the 10 that really stick out to me the most when I think of wide economic moats. So drop a comment, share some other stocks that you think are moats. I might agree with you, it just might not have made the list. In fact, I'll give you a few bonus picks at the end if you're interested in those, so definitely stay tuned, okay? Do me a favor, I'm trying to grow this channel. Share this video with others, drop a like, drop a comment. Anytime you can watch a video in its full duration, it's gonna help the algorithm, and I appreciate your support very much. So what is the 10th pick? Drum roll, please. I have to include this one. I had a hard time picking the 10th, but Disney definitely has a moat, 58 P ratio, $185 billion market cap. It got down to $90, which under $100 I think was a great opportunity, and it still could get there again. It's at 102 or so right now. But Disney has an economic moat, and you think of their content, they own Star Wars, they own Marvel Comics, and you think of the Disney resorts and theme parks. There's really nothing else like it on the planet. You think of branding, Mickey Mouse, Donald Duck. I mean, those are timeless characters. You could argue that Disney has one of the strongest moats on the planet Earth. And so it has to be on this video. Now, here are a few bonus stocks that could have made this list. Before I give you those bonus picks, I'm gonna have a card here at the end. It's gonna give you the top 5 stocks to buy under $10. These are small cap, even micro cap type stocks that could be 10x type returns, 10x or 0 type stocks. Definitely go watch that video when this one's done. I think you'll like it very much. I think it has about 7,000 views. It's been very popular. It's got stocks like Palantir and 4 other stocks, so go check out that video. Okay, so bonus picks. Now these are tough, and I think there'd be more arguments against these than not, which is why they didn't make that top 10 list. I think you could say NVIDIA. You think of AI and you think of the data center chips. They do have some competitive advantages, a lot of different licenses and patents and things like that. Guidewire, which is a company that my wife works for, they really don't have a ton of competition other than Duck Creek Technology for what they do. What they do is they do software, enterprise software for property and casualty companies. So you think of insurance companies, they really run on Guidewire software, and there's not a lot of companies that do what Guidewire does. It's really just one main competitor. So that one is often on Morningstar's wide moat list. Boeing, of course, there's kind of a duopoly there with Airbus and Boeing. Lam Research, if you look at some of the things they do, there's really not any competition in some specific areas. You could also add companies like ASML and a few others that have moats within those sectors. Etsy, I think, is very unique, has its own moat, its own unique niche moat. Adobe, that we talked about a little bit earlier. And I think Tesla, especially when you think of the branding, could definitely be included in a wide moat list. So those are some bonus picks, guys. I hope this was a helpful video. Drop me a like, drop me a comment. If you have not subscribed, do that now. Click that bell to get notifications. Appreciate your time and attention. Have a great rest of your day. Take care.